Welcome to another Pathfinder video. In this video, I'm going to show you how on the 1 minute time frame you can have success when the market is flowing, when there's not crazy news going on, and it's just a fairly normal day in the market setting. Okay, this time frame is going to be focusing on Friday, which was May 2nd. And this is going to be looking at from 10 a.m. onwards. So the market opens at 9:30. You often get a lot of chaos from 9:30 to 10. And then at 10 or afterwards, the market eventually kind of settles into a move for the day. And so within that, I want to show you how through this progression, objectively speaking, without bending any rules or exiting early or anything like that, the market win ratio actually was 17-2 on the 1 minute time frame here on this particular day. So knowing this, your experience in the market should be winning, okay? But a lot of people struggle to move their accounts forward, and I'm going to show you why you might actually be losing and not moving your account forward. So there's a couple things that we're going to go through in here. Again, so let me show you this progression of how things go. 17 wins and 2 losses on a Friday. All right, so let's get this deleted. All right, starting over here. You will see here in this update that I've done for the easy money indicator, which you can see right here, easy money. What I've done is I've added green rays, both for the buys and for the sells. You can see they also exist. I have green rays at where you should be taking profit, either full close or partial profit. Okay, so very simple targets now available to you, so you know exactly where you should be closing in the market. Okay, so let's go over this. The market opens, does its chaotic thing, and then eventually the market picks a direction. Now there's a discrepancy here that I don't want you to get confused about. If you look on the PSI should be turning blue up here, but the market just doesn't close high enough in order for that to happen here on the PSI. But this pushing all the way back up here to the 70 is a bullish momentum. Okay, so after that you're looking for buys. So the market pulls back and it gives us the first buy right here. Okay, now this is very important. This is where people are losing money. On the easy money trades, they're either not entering immediately, so they're entering late, or they have their stop loss in the wrong place, okay? Now what I need you to understand here is when this market has pulled back, you had a flat spot on your basis, the market's pushing up, you don't have a white line on here yet, your white line is all the way back down here. Well, obviously that's not our validation level. Our validation level is the last flat spot in the market, okay, on the Pathfinder basis, okay, which is on the official indicator. So when you have this flat spot, as long as price stays above that level, your trade is valid. So as long as it doesn't close below this level right here, your trade is valid. Now it could cross below and then cross back up, and it would still stay valid, okay, which we are going to see happen. On occasion, you're going to see this. But what we're looking for is we're looking for the market to stay above that level, which means your stop loss, all the stop loss is it's an account protectant in case you get a massive sell-off candle. That happens very quickly. You need to protect your account. But oftentimes people have their stop losses way too close. So you're just going to set a stop loss down here that just protects your account, okay? Your take profit is going to go here on the green line. Very simple, okay? And we're going to press play. And again, as long as we stay at no candle closes below our white line, which will eventually shift, this trade stays valid, comes up, and for no reason should you be exiting this trade, okay? Because it stays valid. Now we have another entry. We're going to do the same thing. We're going to buy here. And again, we have our previous flat spot in the market. We also have this level right here. You can see there's a flat spot. So we should be staying above those levels. So we're going to set that there. We're going to set our take profit here. Okay. We're going to press play and we're going to see how this market reacts, what happens. Now you can see here it does throw another signal. You don't necessarily need to add to it here. You can, but you can just keep your position and see it just keeps throwing these blue ones. It's deciding if it's going to continue or not. Okay, now look at this. You have a new target level that if you want, you can bring your you can bring this down to. Okay, you can see now that we have the white line right here. That will adjust eventually. But you can see here where these previous support levels are. Your stop should be below that. It should be a hard stop. And I want you for the moment to just forget about your risk to reward ratio. This is about validation level, okay? So we let this market go, and now you can see we have a white line here. Our stop, we could move it up just to save a little equity in case you get a big sell-off candle. But as long as we stay above the white line and no candle closes below it, this stays valid. Okay, so right there you can see this wicks below but comes back up in, that stays valid. And this market is now continuing or holding this level, and we should see it rise higher. You can either take a quicker profit here if you want to, or you can stay at the previous level here for the market to continue up and hit targets, okay? Because as you can see, it does come back up into these levels. So now you have another trade right here. You can see you're already up $657 with 5 contracts. We'll just make a note of that so that way you can see, okay? Right here, we click the buy button. And again, this is a pretty easy target to get hit right here. And same thing, this is just to protect our account, worst case scenario if the market sells off. All right, we have our white line, boom, easy target hit. That's another 150 right there. We're gonna set another target here as we have a new level. Our stop loss, again, you want it out of the way in case it wicks. If it just wicks, we wanna stay in the trade. So this is just a hard stop down in here in case you have a sell-off. So we enter that trade, market comes down. You can see that if you want to, there is a deep pocket trade here. After the deep pocket candle, you don't enter immediately, you would enter on the next candle on the push down, okay? So if you want to double down on your position, depending on your risk tolerance, okay, you could do that, and then you have a target set up here. You press play. You can see this wicks below but comes back up, it stays valid. And this target, it comes all the way back up for a huge win on the day. You're now up 940 at this point, okay? Now at this point, you're already above your target for the day. You don't need to be doing more than this. But if you did continue in this market, okay, you would see here's another trade, another target hit. White line moves up. Another trade, another target hit. Stays above the white line, another trade. And right here, we have the market shifting. So right here, this trade comes up, doesn't quite hit the target, reverses, comes down, eventually drops down in here for a deep pocket. The deep pocket has already occurred below the white line. You would not take this. You would not take this, okay? So right here, once this candle closes, you would be getting out. If you're curious how much of a loss that is, we can show you here. So we'll take a buy. Okay, comes down. And right here, you have a loss of $195, okay? So that would put you at 745 off of this one instead if you were to continue to do this. This one gives a pullback trade at the 50 for a continuation of the downside. Although there are no red triangles triggering here, you can see it comes down and it closes at that equal low of the bodies. That's what you're looking for those targets. So this market continues on. You have win after win in here as well, although no signals. Here you have another win, you have another win, and then you have another loss right here. We could take a look and see what that loss would be. Okay, so right in here. And this one closes below right there for a $242 loss. Remember, you had a bunch of wins in here. And so this market, again, pulls back up to the 50, gives another push down. That's a win. This one is a win, stays valid. That's a win, stays valid. This one is a win. stays valid, that stays valid. These all stay valid to come back down and have a literally 17-2, which gives you a massive win rate for the day. So on the 1 minute time frame, you can see here from 10 a.m. all the way until 4 p.m. in the afternoon, there was actually quite a lot of trades on the easy money as well as the deep pockets, which stayed valid and worked in your favor. Okay, so that would put you at 17-2. And again, the most important thing for you to understand is when you take these trades, whether it's a deep pocket or an easy money trade, your validation point is going to be that white line. Okay. Now, if you have your stop loss anywhere above that or even right below it, you have a chance that you're going to get hit unnecessarily. And so remember, the stop loss is just to protect your account in case a big sell-off happens. And so you want it out of reach. You want to make sure you don't have it too close to the white line or on the white line, because you'll get hit unnecessarily and then the market will turn around in your favor. So it's just a hard account protectant. It is going to get hit sometimes. You're going to have sell-offs. Things will happen, but you must protect your account. It is critical for long-term success. Now that just gives you an idea of how this works to the upside and to the downside. So you can see on how this works in the market with hitting targets. Okay, you can see here, target hit, target hit. This one, you would take a loss on this one. This one, you would take a loss on this one. And it's because of the way that this move is. This one, you would have a win, you'd have a win, you'd have a win. Your wins far outweigh your losses. As long as you follow your rules, stick with it, you just have win after win after win on these. You can see them over and over and over again. All right, so that is that's the basis on how to do this with these green rays. They give you very simple targets. And remember, as long as you stay above your white ray or below it, depending on if you're in the uptrend or downtrend, and no candle closes over it, then that trade stays valid. Okay, so keep that in mind when you trade. Stay out of the market open volatility. It can be very difficult to trade successfully. It really takes some advanced trading in order to be able to hit that. But after 10 a.m., the market kind of settles into itself, and that's when you tend to get your trends. All right, hope you enjoyed this video, and remember the two most important reasons why people struggle to move their account forward. They're either over leveraging, they're under leveraging, or they're not allowing the price to hit their targets. They don't close at the targets, or their stop loss is too close. These are all the main reasons why people struggle with this, or they just don't stick to their edge and to what they should be trading. They bounce all over the place. So hope you enjoyed this video. Have an amazing day. We'll see you in the next one.